In this lecture, I'm going to teach you a secret about reading market movements. So when there's a lot of momentum, the Fibonacci's work in different ways. So let's take a look at this point where there was a lot of momentum in the yen, pushed pretty far down, was a bit oversold, snapped back up, and then pushed pretty far down again. The secret is that farther a retracement occurs, the more gas or the more buyers are going to have to come in and push the price of that underlying further and further, either higher and higher or lower and lower, in this case with the yen. So if we take a look here, again, comes down, and you can see that the yen comes down, bottoms out, comes back up to the 50%. It doesn't go to the 61.8, and it doesn't go to the 78.6. After it hits the 50, it goes on, and it goes to the 161.8, because while there were some buyers coming in and pushing this back up, the real market pressure was pushing it downward. If the buyers had come in here and pushed it up to the 61.8 or the 78.6, it's a good indication that there's not as much selling pressure in the market, and that the buyers who are coming in have found a good price in this area which they would like to buy at. Here's another example. So on this retracement, again, a 50% retracement and a push up to the 161.8. So you can see that if it goes up and then retraces back down to the 50% or even the 38.2%, there's a good chance that it's going to go on to go to the 161.8. If it goes up and then down to the 61.8, you probably are only going to get up to the 127.2. Again, it's not a hard rule, but it's a rule that I like to follow to keep me in check and keep me disciplined. Let's look at this move all the way over here. I'm going to zoom in a little bit. So we have from this low to this high, and the market came down and almost pushed down to the 61.8, and then it was able to come and push up here. So there wasn't that actual many buyers wanting to come in. It was only when it dipped down again that it was able to push up and move on a lot further forward. So in this movement where it came up and then came back down to near the 61.8, there was not a lot of gas in the market to get this going again until the price dropped extremely. And then on Monday morning, there's a lot of buying power that came in and pushed it up higher and higher. So let's take a look at this upward trend for gold. Going into this, we have a retracement that's going to occur from here to here. We see that it comes down, and this third one is going to be the 61.8, which it comes down, finds consolidation on. Now if we remove this, the next movement up is to the 161.8. After that, from the 161.8, it comes back down to the 50% level, and then it's going to move up to the, well, just past the 161.8, around the 200% mark. So think of this like a roller coaster. If you go up on a roller coaster and then come down a small hill, you still have a lot of speed going forward that's going to push you up to the next hill. If you go up the roller coaster and you go down a big hill, it's going to take more speed for you to get up that big hill, and then once you get to the top, you won't have that much speed left. So take this into account when you're doing your fibs and your projections, and trying to figure out whether your projection or your price target for your underlying is going to go to the 100, the 127, or the 161.8.